Amerigo Resources recently announced excellent 2024 operational results and strong 2025 production guidance from their MVC copper project in Chile. We sat down with CEO Aurora Davidson to discuss the company's results and her outlook for copper prices in 2025. So, Aurora, earlier this week, Amerigo announced 2024 operational results and 2025 guidance. Can you please identify some key highlights from this release?
So in terms of the highlights, what did we report? We reported copper production of 64.6 million pounds. This is 3.5% over our guidance. We sold 65 million pounds of copper. This is a record, annual record for Amerigo. So that was that's the main announcement. Now, as you know, we also produce molybdenum, moly, as a byproduct. And in terms of the moly production, we also beat our production guidance by 8.3%. We produced 1.3 million pounds of moly in 2024. But I always speak with our people in Chile that we're not here to produce copper, we're here to produce financial margin. Well, both copper and financial margin. So in terms of our performance, we are very keen on tracking and keeping on top of our cash cost. And we provide a very precise cash cost guidance annually as well. Our cash cost for 2024 was $1.89 US per pound. And this is 10% below the guidance we had provided a year earlier for 2024. So both in terms of production, in terms of the cash cost, the operational results were great. Very importantly as well, we operated in 2024 without any accidents at MVC. So we have, again, for more than two consecutive years, a clean safety record for our employees, and we operated without any environmental incidents. So operationally, this is a gold standard. It was a phenomenal year. We're happy to provide those results, and we were also very keen in providing our 2025 guidance, which is showing an increased production guidance for 5 consecutive years. So in 2025, we expect to produce enough copper to generate $67 million US in EBITDA at a very conservative copper price of $4.15. In 2025, we also expect to fully repay our debt. So we will be ending this year without any debt at Amerigo, which is great news for the company and for shareholders. Those are the highlights, both in terms of the operational results for the year and what we're providing as 2025 guidance.
So your cash balance is high. Is this a record for Amerigo? And what can investors expect the company to do with this excess cash?
We ended up with a strong cash balance at year end, almost $36 million. It's not the highest we've had, but that's not a metric that we're trying to beat. We're not trying to beat how much ending cash we have at quarter end. What we're trying to do is distribute that cash to shareholders so that we can keep an optimal cash balance, a cash target of around $25 million. That's a safe amount of money for us to operate and to feel that we're not, we have enough liquidity on an operational basis to continue with the business, and then distribute the rest. But what happened? We saw in the fourth quarter of 2024 a lot of volatility in copper prices, and we saw that there was that tendency for a slight cyclical dip, which in fact numbers speak better than just the commentary. What happened? We had an average copper price of $4.33 in October. That went down to $4.12 in November. That went down to $4.05 in December. So under those circumstances, we thought, even if we know that we're going to be ending the year with more than 25 million cash target, it is prudent to just temper our speed of distributing that cash to shareholders and see what happens in the next few months. Remember that we sell our copper on an M+3 basis, so that means that the copper that I sold in September of 2024 is going to be priced at a December price for copper. So we have to have that substantial lag in time when there's cyclicality in copper prices protected, so that we can settle those copper sales at the lower price. So yes, we ended the year with a slightly higher cash balance than our target, which is not a problem. That's going to be distributed once copper prices start recovering, and we're seeing that as of now. LME copper prices, even if there's a little bit decoupled against the COMEX price, and we sell at the LME price, they're starting to come out of that low fours. So that is good. Now, when we're talking about what happened in 2024 with an average copper price of $4.15, we distributed $21.2 million of cash to shareholders through the dividends, both quarterly dividends, our first performance dividend, and share buybacks. Our guidance for 2025 is using the same copper price that we had in 2024. We're projecting 67 million EBITDA US, and we're projecting as well $22 million of free cash flow to be generated just in the year, plus the extra around $10 million that we ended up 2024 over our target. That creates a very significant cash pool. And as you know, we have no growth capex requirements, so that cash pool is being returned to shareholders, has been returned to shareholders consistently for 3 years.
Despite many moving pieces, including a strong US dollar, copper prices have remained resilient. So what's your outlook on copper prices for 2025?
My outlook is very positive on copper prices, including in 2025. So that hasn't changed, and there is no fundamental reasoning for me to change that position. But once a year, I put on a very conservative hat, and that is when we prepare our budget, because I don't want to be creating a plan for the company based on a copper price that is not crystallized in front of us at the time we're preparing the budget. So in Q4 of 2024, we were seeing this volatility, we were seeing this short-term copper price dip, and we worked on the basis of creating a budget that was conservative. As I said, we decided to use $4.15 as an average copper price, but in fact, our budget speaks of a $4 copper price in the first semester and a $4.30 copper price in the second semester. Again, my reasoning tells me we're going to be having stronger prices than that. But when it comes to the point of creating the plan that will allow us to meet our capex, repay our debt, and pay our dividend to shareholders, we need to ensure that we have everything in place that will allow us to do that, even if copper prices are on the lower part of the cycle. So that's the answer to the question. We feel quite comfortable going into 2025 with a very conservative $4.15 copper guidance that has been tabled to the market that shows that we're going to be generating 67 million EBITDA under those conservative prices, 22 million of free cash flow to equity. So everything is good. If you want to make a note of the comparison between the actuals in 2024 and the guidance for 2025, you're almost looking at twin years. They're almost identical. So it's exciting. I'm very pleased to report the results for 2024 and also confirm that at least we expect to do as well in 2025.